I made two 4-point trades today in the first hour of trading on the ES4 Renko on January 5th, 2012. I entered the first trade on this bar here, which was the second bar formed after the opening. Swing cycle was red and was plastered along the bottom right here, and all the indicators lined up for a short trade. The DMI differential, a down binary triangle had formed here. The R squared and linear regression slopes had crossed each other right here, which is a good indication of a downtrend, and the Bollinger Band differential oscillator moved below its zero line right here. Now, when the indicators are all lined up like this, you have better than 95% chance that it's going to be a profitable trade. So I got out of the trade right here for a 4-point profit. Now, why did I get out here? Because none of the indicators really are showing that the down move has come to an end. Well, the equity was getting oversold because the swing cycle VB was down here at 20.33. So I knew it was getting oversold here. I had 4 points profit. If I can make 4 points profit in a trade, then I'm happy with that trade. So I didn't feel it was going to go much lower than this. I thought I was probably within a point or so of the absolute bottom of this move. And so that's why I got out of the trade here. And as you'll see, that was a good point to get out of that trade. Now here was the second 4-point trade of the day. Again, this was all within the first hour of trading. I went long on this bar right here when the swing cycle suddenly turned green and shot way up to the top of the chart here. So I knew that there was going to be an up move here, and there had been quite a long squeeze right in through here. So I went long even though the DMI differential was still red and still below the green dots here. But there was enough confirmation in the other indicators. The DIX and the binary triangle and the linear regression slope had just crossed above its zero line here, and the Bollinger Band differential oscillator was coming off a squeeze of itself right here, and the indicator line moved above the Bollinger Bands right here, in the midline dashes turned green. So this was a trade that I didn't think would be any tremendous up move, because the Bollinger Band differential oscillator was still way below zero here. But I thought it would probably get up to today's open. This is yesterday's close, and which would serve as resistance on the up move. So I got out of the trade on this bar right on here just as it was forming at 1266, and I'll show you in a second why I got out of the trade on that bar right there. Now I wanted to show you a reason why I got out of the trade on this bar right here as it was forming right in here. What I like to do sometimes, and I don't like to leave it on the screen because I don't like all the clutter on the screen, I draw a Fibonacci retracement, and I always draw it on a downtrend from the base of this down triangle, or from the base of the triangle on an uptrend, but always from the base down to the lowest Renko bar, which, as you can see, is right here. And so it showed a 50% retracement level at 1266.62, and I didn't feel this was the beginning of any uptrend. So I felt that once it got to this 50% retracement mark between 50 and 61.8 is called the ambush zone, I felt it would turn around right in here, and that's why I got out of the trade after that 50% retracement was hit. And as you can see, that was indeed the case, and the next couple bars were on their way down, and the indicators are also moving down here, and a down binary triangle was starting to form right in here. So that's one little trick I use to give me an indication of whether to stay with the trade or get out of the trade. By the way, I'm giving a webinar tomorrow at Ninja Trader, and it'll be at 4:15 Eastern Time. So if anyone is interested in attending it, please drop in at Ninja Trader at that time.